Hello and welcome back to Never Change. Here we'll be going through how I personally analyse how healthy a company is and at what price I should invest. I am not a financial services expert, so if you do need financial services expertise, I suggest you find a suitably qualified individual. So this is how I personally would analyse AMD. So let's just, to start with, what is AMD? So AMD is Advanced Micro Devices. They are based in Santa Clara, California, USA, and they develop computer processors and related business technology and related technologies for business and consumer markets. They were founded almost 51 years ago, have approximately 11,000 employees and an annual revenue of about $10 billion. And their current CEO is Lisa Su, who has been in post since 2014 and has been heralded as the person who turned around AMD. And I put that down to her being an engineer at heart, and she's kind of unshackled her engineers, let their imaginations run wild and come up with some fantastic products. So let's deep dive. So who are AMD's biggest competitors? So obviously no surprise, Intel and Nvidia. So Intel, founded around the same time, has a much bigger revenue of $77 billion US, headquartered in the same location, and they predominantly produce CPUs like AMD and other related technologies for both business and consumer markets. Also in the biggest competitors you've got is Nvidia. So they were founded in 1993. They have roughly similar revenue with just over $10 billion, almost 11 billion, sorry. And so Intel would compete mainly on the CPU side, but they are making inroads into the GPU side, and Nvidia would compete on the GPU side but making inroads into the CPU side with likely acquisitions such as ARM, if they can ever get it past. So to start with, let's look at AMD's credit rating. So AMD's credit rating on the S&P is BBB-, which worryingly is just above speculative grade, which can also be considered junk grades. I believe this is because for a number of years they were bouncing along the bottom, barely making a profit, and just couldn't compete with the likes of Intel and Nvidia. But times are changing, so the AMD have some amazing products and beating the competition in a number of areas. So the credit rating is under review and is likely to be upgraded. So next thing I'd have a look at is AMD's common size analysis. And so this is where on the number of the headings you would divide the heading by revenue and to come up with a percentage, and then use those percentages to look at trends. So we're using 3 years of history here. So if you look at revenue's trending up, good indicator. Cost of services trending down, another good indicator. So that means as the cost of services, as the revenue is increasing, the cost of providing those goods and services is decreasing. So they're getting more efficient about how they operate. Gross profit going up, good indicator. Operating expenses maintaining that 30% level as revenue is increasing, good indicator. Research and development, they are still managing to get around 20% of revenue back into R&D. So in 2020, 2 billion, and it's also been trending flat, but increasing but trending flat as a percentage. Operating income, again trending up, good indicator, and profit trending up as well, good indicator. Earnings. So looking at what the analysts thought they would AMD's earnings per share would be over 2020. They've either met every quarter or beat every quarter, so a really good indicator there. And financials over the past 4 years of AMD shows revenue increasing and earnings increasing in line, so excellent. So nothing to worry about in regards to common size analysis. As Phil Town would put it, moat analysis. How protected is this company? So if we take a 4-year period as to try and work out the average, so earnings per share is increased over 4 years by 168%. Operational cash flow is increased by 86%. Revenue on average has increased by 16%, and book value per share is increased by 66%. So we're looking for here at least 10%. So there's no cause for concern here. The only cause for concern I would have is, can they keep up this level of gains? So now moving on to return on equity, return on invested capital. Return on equity is at 43%, looking for 10%, so good indicator there. Return on invested capital, I've realized I've just made a mistake. Instead of using net operational profit after tax, I've actually used net income, but the tax was about 1.2 billion, so that would reduce the ROIC to, instead of 40%, it would be 20%. So still much above the 10% that we're looking for. And then also moving on to debt. So how much long-term debt is AMD carrying? So long-term debt is only at 330 million. And so could that be paid back within a 3-year period? Quite easily. So this is gauging how well management are investing back into the company and managing the company, and so all the indicators here show it's being run very, very well. So now let's move on to, so we've established there's a healthy company, it's growing, it's all trending in the right direction, so we're not worried about the health of the company. But when do we enter it? So using margin of safety, so current earnings per share is at $2.06. Earnings growth rate, so if we take an average of the analysts' expected growth rates over the next 5 years and the average of, it's 26%. The future PE multiplier, which currently stands at 31.87. And what we're looking for in regards to our minimal acceptable return, which I've put here as 20%. So based on a margin of safety using those parameters at 25%, we're looking at a AMD share price of $82.20. So at that price, you would consider investing in AMD. Same parameters, but a margin of safety of 50%, which I consider a very, very good price for AMD, would be $54.80. We'll come back onto that in a minute. So another thing I apply to an analysis that I apply to a company is the 8-pillar analysis. And so AMD currently at a share price of $78 with a market cap of 94 billion passes 5 of the 8 pillars. So it fails on a less than 20 PE ratio. It manages a profit margin is greater than 10%, currently stands at 45%. It does have revenue growth over a 5-year period, on average of 16%. It does have profit growth on average of 24%. it is increasing its number of outstanding shares instead of decreasing. So your shareholding is being diluted over time. So that's not a great indicator. Current assets should be greater than its liabilities. Its liabilities only sit at 27% of its assets, so a good indicator there. Free cash flow growth has grown year on year and currently stands 30% greater than last year, so another great indicator. But then if you price to free cash flow, currently stands at 82% based on a share price of $78. So that probably indicates that the AMD, for where they are at the moment, is slightly overpriced, probably more than slightly. So if we run the same analysis and try to see what an acceptable price to cash flow would be based on, so let's run it through again with the 50% margin of safety. So based on the 50% margin of safety, with a share price of $54.80, with outstanding shares of 1.2 billion, market cap then would equate to $66.1 billion. And so if you put that back through the pillars, you would end up with a price to free cash flow of 23.65%, which is probably on the lower side considering the rate of growth, but a much safer investment. So if we now consider the pros regarding continued growth, so there are absolutely huge demand for CPUs and GPUs going forward, mainly driven by people stuck at home, want a game, massive demand for mining cryptocurrency, etc. And well, more and more demand on chips because everything is becoming more and more smart, such as cars, phones, etc., etc. And also they now offer the chips into Sony, PlayStation and Microsoft Xbox, so huge potential for growth there. They have a really good partnership with TSMC, in which they produce all of their wafers for them. That's because AMD doesn't have any internal wafer fabrication. It outsources all of that. Its CPUs, so its products, are considered greater than the competition, definitely on the CPU front. The GPU, it does go a little bit toe to toe with NVIDIA, but NVIDIA still gets the performance crown. As long as there's continuous crypto demand going forward, it's showing no signs of slowing down at the moment, so that demand should stay there. Also, the CEO Lisa Su, who came in 2014, her and her leadership team are performing really well. They're innovating, they're growing, they're smashing the competition at the moment. So as long as they can keep that up, there's no danger there. And also they're increasing their market share of CPUs over Intel, which I'll come on to later. Limiting factors that are currently that could impact growth. So should the crypto bubble burst, you're going to have a lot of crypto miners used hardware hit the market. That could impact future sales. The reliance on TSMC to produce all their wafers. So TSMC are running pretty much at full capacity. So if AMD wants to grow, they're reliant on TSMC being able to grow. So there is definitely a cause for concern and a risk there. Also, so AMD may have knocked Intel off the top performance and attain the performance crown, but Intel will want that back, and they're willing to throw huge amounts of money at R&D in order to get there. Intel are struggling at the moment. They have gone through that. They have hit a bit of a speed bump in regards to their innovation and got stuck on the 10 nanometer 10 nanometer transistor, while AMD jumped the 10 nanometer and went straight to 7. So, but Intel possibly can catch up. I mean, if you look at the R&D of AMD, so they're just shy of 2 billion a year in R&D, whereas if you look at how much money Intel invest in R&D, it's more around 20 billion. So sooner or later that's going to pay off. And also Intel are looking at producing more of their own wafers in-house, and they're going to set up more of their own fabrication units. So, you know, Intel could be one for the future, but maybe not at the moment. One of the limiting factors which I find quite amusing is that AMD have terrible marketing and terrible product presentations. If you watch the share price at the same time as they do their product presentations, it absolutely tanks, and that's because they have engineers introducing their products rather than sales and marketing people introducing their products. You know, there is no, you know, you don't have to be a genius to understand why Steve Jobs was, you know, he was such a good salesman, and that's why you could, you know, you stand up there and shift product. But to get your engineers to introduce products, it just doesn't work. Leave them to produce them and then get salespeople to sell them. So market share on GPUs, not great at all. I'll come on to that shortly. And they've got a bad track record of software and drivers not working properly, specifically on the GPU side. So GPU market share. So just to put things in a little bit of perspective to show how far behind the competition AMD are. So based on the mid-range GPU, which is on NVIDIA side the 3070, and on AMD side the RX 6800. If you like, the people who buy these products are computer geeks, and the first thing they're going to do as soon as they buy them is benchmark them against the competition. It's what they do. So if you look at the unique individuals who have benchmarked the NVIDIA GPUs versus the AMD GPUs, that's quite a contrast. You've got almost 170,000 unique benchmarks of the 3070 versus 6,000 unique benchmarks of the 6800. To put that in revenue wise, so if you based the 3070 on a £600 product, that's approximately over £100 million worth of product versus £3 million worth of product for AMD. So yes, their offering almost goes toe to toe with the competition, but their market share is nowhere near where NVIDIA is, and I think that's just because NVIDIA can just outproduce them massively. So that's the middle ground. Let's look at the flagship offering, which on NVIDIA side is the RTX 3080, and on the AMD side it's the RX 6800 XT. And again, you've got 114,000 unique benchmarks of the 3080, and you compare that to just under 8,000 unique benchmarks of the 6800 XT. Revenue wise, if you gained an average of per GPU being £800, you're looking at £91 million worth of product versus £6 million worth of product. So if you calculated that as a market share, it wouldn't even be 5%. And I believe that AMD absolutely dropped the ball here, because if they would have produced them, they would have flown off the shelves, and they just underestimated the demand for GPUs massively. And now there's not enough fabrication space in the world left for them to capitalize on it. CPUs is a better story. So if you take the Intel the Intel 10 series and the AMD 5000 series, rather than going through each individually. So overall across the series you've got 219,000 unique benchmarks of the 10 series versus 195,000 unique benchmarks of the 5000 series. So that's almost a 50-50 share, market share. So definitely making progress on the CPU front. So conclusion. So AMD scored amber on credit rating only because they are only just above junk status or speculative status. But I believe this will, the reason why this is amber and not red is because they're currently under review, and I'm sure the credit rating will be increased in line with their current performance. No worries in common size analysis, no worries regarding the Moat analysis, no worries regarding return on equity and return on invested capital, no worries in regards to long-term debt. They didn't pass all 8 pillars, so give it an amber because they did pass 5 of the 8. So all in all, AMD has really good growth potential going forward, and the risks that they face, I believe, is manageable. They're currently valued at the time of recording this at around $78 a share. I believe this could be slightly over. This is overpriced for where they are at the moment, and a good share price for this would be between $55 to $60 a share, and that's using a 50% margin of safety. So I hope that helps. So this is how I would analyze a company and its stock price. If this has helped you out, please hit the like button and subscribe. If not, and you believe I've done something wrong or not considered something that should be considered, please let me know. You know, as all investors, we this is a forever learning feast. So happy to learn, happy to share, and yeah, thank you, and hopefully see you again. Goodbye.